Hello friends, today we are going to discuss levy and exclusions from GST. Before I come to the topic, I just want to share with you what are the similarities between the GST and the present indirect tax system. If you look at it from the GST perspective, it all remains an indirect tax. Like the present system, VAT, service tax, excise, it remains an indirect tax which has to be collected by the supplier from the recipient and has to deposit to the government. The incidence of tax which has to be borne by the recipient generally, unless otherwise there is an agreement between the two to the contrary. This GST is also based on the technique of VAT, value added tax, the manner in which the presently state GST, state VAT, service tax, and excise is being based. Next, in GST also, we have to follow the three steps to calculate and discharge GST liability. The way we do it presently in state VAT, service tax, and excise law, that is, we have to calculate our output tax liability, tax credit has to be calculated for that period, and then net tax has to be paid by the supplier or refund has to be claimed in case the credit is more than the amount of output tax liability. The concept of unjust enrichment, that is, no one is allowed to make profit out of taxes, shall be applicable to GST also, and the principle that single transaction cannot be subject to taxation in the hands of both supplier as well as recipient shall continue to be applicable in GST as well. Now, friends, we'll come to the differences which are there between the GST and the present indirect tax system. The biggest change and the biggest challenge is the taxable event. Presently, VAT is leviable on transfer of property and goods. Excise duty is on manufacture, service is on provision of service, whereas the taxable event under the GST is going to be supply. And that is the major change vis-a-vis the present system of indirect taxes. Then, presently, all the indirect taxes, there need to be two parties. For example, if we talk about VAT, there has to be a seller and a buyer, custom, importer, and the person who is exporting the goods, excise, manufacturer and customer, provider and recipient. In GST, however, wherever we are transferring the material to our own branch itself, even that transaction, though between the two units of the same person is there, will be subject to tax. Third change, which is a major change from administrative point of view, unlike present system where the service providers can get themselves registered on a centralized basis if they are providing services from more than one outlet, is dispensed with in GST. Scheme of composition, I don't say it is totally changed. This composition scheme which is being suggested in the GST is based on the VAT law and not on service tax and excise. If we look at the service tax composition scheme in works contract, the scenario is entirely different. We will discuss in detail the subject when we will discuss the topic. Now, a very strange feature, of course, the trade and industry all are complaining against that. But yes, presently in the model law, they have provided that the tax credit shall be available only when the payment has been made by the supplier to the revenue. Unlike present system in service tax and excise, of course, VAT they have followed, wherein I was entitled to the credit even if I was not registered. Now in GST law, they have clearly provided that registration is a must in case you want to claim the tax credit. Now, friends, we all understand, we'll just give you a background with regard to the change in taxable event and the GST. Both Parliament and state assemblies shall have the power to make laws on taxation of goods and supplies. Exclusive power has been given to the central government to collect tax on IGST, and then it has to be shared between the center and the state as recommended by the GST Council. Central law shall provide manner of sharing of GST between center and state based on GST recommendation, as I told you earlier. There are two kinds of transactions which are being envisaged under GST. One is transactions within the state, which we call intrastate transaction, and transaction between two states, which we call interstate supply. So far as intrastate supplies are concerned, on that transaction, both CGST and SGST shall be levied. And so far as IGST is concerned, that is interstate transaction, the IGST shall be levied on that and shall be collected in such manner as may be prescribed. And this is what the section 7 of CGST model law provides for it. Again, I am repeating, it's an important thing to understand that CGST and SGST shall be levied on all intrastate supplies at the rate specified in the schedule. No rate has been specified presently in the schedule. It all depends on the recommendation of the GST Council. The whole country is looking at that because now the procedure of adoption of law by the state legislature is over. President has to give the assent and thereafter GST Council has to be formed. So everybody, trade, industry and professionals, everybody is looking at the GST Council, of course the coming one, to look at it, what is the rate which they are going to prescribe. And the same shall be collected in the manner as may be prescribed. If you look at this charging section and compare it with the existing one, there is not much of a difference. If you read the 66 capital B of the present Finance Act 1994, it clearly says there shall be levied a tax at the rate of 14% on the value of services other than those specified in the negative list provided or agreed to be provided by one person to another, which is missing in this definition, as I have already given you the background for that, on one person to another in the taxable territory and shall be collected in such manner as may be prescribed. Now, the terms which are really important is intrastate supply, that has to be a supply within the state, and as per the model law, the supply will be intrastate only when the supplier and the place of supply will be in the same state. And then, what is the meaning of the word supply? And then it is on goods and services. What is the meaning of goods and services? We will go to each one of those terms. But now, we have to understand that this interstate supply, which will be taxed under CGST and SGST, has to be paid by every taxable person. I just want to tell you there's a difference between registered person and taxable person. For example, if I am doing a business in Delhi, my turnover exceeds 9 lakh, I am liable to be registered, but my liability to pay shall arise when my taxable quantum of 10 lakh shall increase. So that is why in the charging section, they have used the word taxable person and not the registered person. Then the power has been taken by the central government and the state government to specify on which supplies there shall be liability of reverse charge. If you compare it with the present system, you will appreciate presently reverse charge, which is applicable to service tax, is full reverse charge, partial reverse charge, and even in the case of aggregator, is neither a provider nor a recipient has been asked to discharge the liability of service tax. I am sure those kind of things may also be introduced in GST. For that matter, we need to wait till the GST Act with the rules are being formulated. Friends, Section 4 of IGST Act deals with this IGST tax on interstate supplies. But today we are going to discuss the interstate supplies, and interstate supplies has not been defined in GST model law. However, if we refer to IGST Act, then Section 3 capital A clearly provides that intrastate supply of goods or services means any supply, either of goods or services, where the location of the supplier and the place of supply are in the same state. If you read this definition, you will appreciate that the location of the service recipient is not important. Location of the recipient, rather I should say, rather than service recipient, because it's GST law. So location of the recipient of supply is not important. What is really important is location of the supplier and the place of supply. And the place of supply, there are separate rules for that. We will discuss that in due course of time. And similarly, location of the supplier has been defined in Section 2. So we have to go by that section to decide. And if both these conditions are being met, that is the location of the supplier and the place of supply is in the same state, then it will be interstate supply subject to CGST and SGST. To determine the exact place of supply, provision of Section 5 as I told you, and Section 6, place of supply of service of IGST Act has to be referred and followed, which is a different subject, and we will deal with that when we deal with the topic. We will deal that particular topic. Now, the most important thing is tax is on the supply. What is supply? This is the issue, this is the term which will be debated in the times to come. Of course, final call will be taken by the courts, but as the law stands today, Section 3 says it is an inclusive definition. First of all, you kindly look at it. Supply includes. It is an inclusive definition, not an exhaustive one. All form of supply of goods and or services such as sale, transfer, barter, exchange, license, rental, lease or disposal of goods or services for a consideration by a person in the course of furtherance of business. So if we look at this meaning of supply, it has got peculiar feature. First of all, it is applicable on both goods and services. And again, they have given an example, again by way of such as term being used, and then 8 form, sale, transfer, barter, exchange, license, rental, lease or disposal are being used with reference to goods and supply. Of course, these terms have not been defined in the model law. They have to be taken their meaning in terms of the Supreme Court judgment, the way they are being understood in the common commercial parlance. And such supply shall be for a consideration and in the course of furtherance of business. Unlike present definition of service, if you compare it with that, consideration is common, but in the furtherance of business is the addition herein. Whereas if you look at the definition of service in section 65 capital V subclause 44, it read as follows. Service means any activity carried out by one person for another for a consideration and includes declared services. The consideration part is common, but there the activity may or may not be in relation to the business. Here it has to be in relation to the business. So 3 important things: supply of goods and service, either by your sale, gift, etc. And then there has to be a consideration and it has to be in the furtherance of business. That is really important to understand. Then comes importation of service with or without consideration, whether or not in the course of furtherance of business. So that means once I am importing any service, then whether it is for my personal use or in the furtherance of business, both shall be subject to tax, and that too whether I am getting that service with or without consideration. Of course, if you look at section 9, I remember, if my remembrance is right, is subsection 3, clause C, which says that we will provide a limit for the exemption when the services are being imported for the personal use of the receiver. So right now, in this definition, they have clearly specified that all importation of service, whether for business or for personal use, with or without consideration, shall be subject matter of GST and shall be leviable to GST. Then this is the main thing which is different than the present system of indirect taxes. Supplies specified in Schedule 1 made or agreed to be made without a consideration. If you look at the present definition of service, provided or agreed to be provided, because the term is supply, so they say made or agreed to be made without a consideration. Unlike present definition of excise laws, VAT or service tax, where the transaction has to be for a consideration, in this GST, they have created a particular class which is against the general principle. As I was reading it earlier in the previous slide, I told you all supplies for a consideration. But as an exception, they say that these transactions, even if they are without consideration, shall be subject to GST. The matter specified in Schedule 2 for determining what is to be treated as supply of goods or services. So, the traditional definition of goods and services has been tampered with in order to avoid the legal dispute between the SSC and the department. Once we go to the definition of goods and service, I'll tell you how it is being tempered and what is the difference between the existing definition of goods and services vis-a-vis definition adopted for the service tax. But Schedule 2 clearly provides that these are the particular activities which shall be considered good and these are the particular activities which shall be considered service. It is important from that point of view that once it is being determined whether it is a goods or service, In my humble personal opinion, I am again using the word personal opinion, according to me, there may be more than one rate of tax so far as goods are concerned, and so far as services are concerned, there has to be a common rate of tax, and that common rate of goods and common rate of service tax shall be the same. But then there can be a concessional rate of GST so far as goods are concerned, and there can be a demerit goods. So, from that point of view, first of all, we have to decide whether the supply made by the supplier is a goods or service, and accordingly, the rate of tax has to be applied to that. Transaction between principal and agent shall be deemed to be a supply. They are saying, for example, if I am appointing an agent to sell my goods and he is selling the goods, he is getting a commission from me. So, the commission activity or the activity which has been performed by the agent on my behalf, that is for selling, and he is charging a commission, shall also be considered to be a supply made by the agent to the principal. Deemed supply of service by an aggregator. We all understand that the term aggregator was came into picture or being popularized at that point of time when Uber, a very well-known online service provider with regard to cab, was being served with a notice. They say we are not the service provider, it is the taxi owner who is providing the service and the passenger receiving the service. We are only permitting them to use our platform wherein we induce one person to avail services from a particular person, and we charge our commission with regard to the receipt which is paid by the service receiver to the service provider. So then the term came because the aggregator was not liable to make tax, that aggregator responsibility was being discharged, that either they should have a person in India to discharge the service tax liability on that transaction, or they should appoint someone. So looking to that aspect, the same provision is being continued even in GST law. After understanding the meaning of supply, now we will go to the important definition used in this taxable clause. 1. Goods, which has been defined in subclause 48 of section 2. Goods means every kind of movable property other than actionable claim and money, but includes securities, growing crops, grass and things attached to or forming part of the land which are agreed to be severed before supply or under the contract of supply. I am sure all of you will appreciate that there is no change so far as the goods definition is concerned. But what is really important in the GST law is the explanation, which was not applicable till the GST law is being made applicable. Now, this explanation, for the purpose of this clause, the term movable property shall not include any intangible property. We all know the landmark judgment of TCS given by the apex court of this country, wherein they have held that even intangible property can be held to be goods if it has all the features which are there in the tangible goods like storage, captive consumption, etc. Now we will move to the definition of service, which is given in subclause 88 of section 2. Service means, it's an exhaustive definition, anything other than goods. Now, once such a wide definition has been given to the meaning of the term service, it is already being disputed in the professional circle whether the immovable property shall also fall in the definition of service, because service has been called or has been defined as anything other than goods, and goods we have already discussed any kind of movable property. So goods does not cover the term of immovable property. So whether this immovable property shall be included in the definition of the term service, I think the government has received this suggestion from many quarters, so they will certainly look at it while drafting the GST bill, that immovable property does not get included in the definition of service. And then the explanation is equally important as in the case of goods. Services include intangible property because there was an exclusion being provided from the definition of goods. So included in the term service and actionable claim, but does not include money. Now, by including tangible goods in the definition of service, makes it absolutely clear that the rate which will be applicable on the supply of tangible, though they are being goods, will be the rate which is applicable on the services. This is an important thing to be noticed. And then actionable claim is also being included in the definition of service. For example, lottery held to be actionable claim. So supply of lottery shall be treated as a supply of service and shall be accordingly taxed under GST. That means the rate which is applicable on the supply of services, but it does not include money. So money is being excluded from the definition of service, though for intentionally it is being done so that the transactions which are purely in money should not attract levy of GST. Now we will move to another important definition, that is definition of business. As we have already discussed, normally the supply in the course or furtherance of business is subject matter of GST. So it is really important to understand what is the meaning of the term business, which has been given in section 2 subclause 17. It is again an inclusive definition and contains so many subclauses. If you look at it, clause A talk about trade, commerce, manufacture, profession, vocation, or any other similar activity, whether or not it is for a pecuniary, that is monetary benefit, and then any transaction in connection with or incidental or ancillary to A above, then any transaction in the nature of A above, whether or not there is a volume, frequency, continuity, or regularity of such transaction. Similarly, you can go through the clause D also, which is on their monitor, and then you will see that clause E, wherein provision by a club, association, society, or any such body for a subscription or any other consideration of the facilities or benefit to its member. So even the activities which has been carried out by unincorporated association for the members is subject matter of GST. Similarly, admission for a consideration of persons to any premises, services supplied by a person as the holder of an office which has been accepted by him in the course of furtherance of his trade, profession, or vocation. So you will appreciate, and this definition is concluded now. So far as business is concerned, it is a very wide definition covering everything, even if there is no frequency, volume, etc. So the government has made sure that the definition of business has been drafted in such a widely manner that no transaction will escape the levy of GST. Then GST is applicable when it has been provided by a taxable person. But before we go to that, I think it is really important to understand the definition of person, which is given in 274. I think this is the widest possible definition I have ever read in any fiscal statute defining the person. According to my understanding, there are 14 subclauses, which I am just going through hurriedly because it covers everything, and you need to have a very innovative mind to come outside the definition of the person, which according to my understanding is not possible. And then the subclause N, which is the last clause, is really important to understand. Every artificial judicial person not falling within any of the preceding subclauses. So 13 subclauses which specifically include government, local authority, partnership firm, individual, body, corporate, etc. And then there is a residual clause N also, clearly showing the intent of the government that the definition of person is as wide as it could have been. And now we are coming to the definition of taxable person provided in section 9. This definition is really important because it is the taxable person who has to pay or discharge the GST liability. Now, kindly go through the definition. Taxable person means this is an exhaustive definition. After 3-4 definition which we have gone, all were inclusive. This is the definition which is exhaustive in nature. Taxable person means a person who carries on any business at any place in India or in respective state. Now, kindly appreciate carries on any business, and we have already gone through the definition of business, section 217, which is very wide, at any place in India. Now, unlike service tax, wherein the specific exclusion was provided to the Jammu and Kashmir, in this section, there is no exclusion being provided to the Jammu and Kashmir. So, this levy shall be equally applicable to all the state of India, including the state of Jammu and Kashmir. And once I am liable to be registered, wherever I am carrying out an activity, so the concept of centralized registration is gone. For example, a chartered accountant or any service provider who is providing services from 4 states and is maintaining its office in all those 4 states and issues invoices from those states, has to get himself registered in all the four states, whereas in the present scenario, that service provider can opt for the centralized registration if he is having a either centralized accounting or centralized billing. Now there is no such provision being provided. So all service providers having multiple locations in India in different states have to get themselves registered in all the states from where they are carrying out the activity. And then taxable person shall also include those persons who are required to be registered under Schedule 3 of CGST Act. Schedule 3 talk about the persons who are supposed to seek registration. So taxable person who satisfies those parameters or falls in Schedule 3 will also be treated as a taxable person. However, registered persons specified under paragraph 1 of Schedule 3 shall not be considered as a taxable person until his aggregate turnover in a financial year exceeds 10 lakh and 5 lakh for northern eastern states. Kindly appreciate, and I have already told you that the difference between registered person and taxable person. I have already stated earlier, I am just repeating for the cause of repetition, that I am supposed to seek registration the moment my supply increases for more than 9 lakh, but I am liable to pay service tax only when the value of supplies made by me exceeds 10 lakh in the whole of India except the northern eastern states where the limit has been kept at a lower level of 5 lakhs. It is really important that the central government and state government is also being considered as a taxable person unless otherwise they are carrying out the activity which has been specified in Schedule 4. Schedule 4 talk about the statutory functions of the central government or the state government. Barring those activities which has been specified in Schedule 4, the central government and state government shall also be treated as a taxable person and will be liable to discharge service tax liability. The strength of the chain is the strength of its weakest link, and I personally feel, it is my personal opinion, that composition scheme is the link which is the weakest one in any fiscal statute, and the same principle applies to GST also. But yes, the government is under political compulsion to provide certain facilities to the small taxpayer. So everywhere they are coming out with the composition scheme, maybe called by a different name. In VAT law, it is being called composition scheme only. So in GST also, they are talking about a composition levy, which is being dealt by Section 8 of GST model law. If you read this section, which is being reproduced in this slide, it clearly talk about that notwithstanding anything to the contrary contained in the Act, it is a non-obstinate clause, and the provision of this section shall prevail over other sections, and this scheme is not available wherever the recipient of service or recipient of goods, that is recipient of supply, is being made liable to pay service tax under reverse charge. Another condition which is being prescribed under this section is that the person who intend to opt for the composition levy, his turnover shall not exceed 50 lakhs in a financial year. What I am talking about is aggregate turnover, the term which has been used in this section, and we will go to the definition because this term has been defined in section 2, and it has been prescribed in the law that the tax shall not be less than 1% of the turnover during the year. Meaning thereby, we are talking and dealing with the intrastate supplies. So there is a CGST Act and SGST Act. So meaning thereby, the composition levy shall not be less than 2%. And this composition levy is applicable only when the person is dealing with the intrastate supplies. Meaning thereby, if a person is having a transaction in the course of interstate trade, then he is not entitled to opt for the composition scheme. This is really difficult for the chartered accountants. For example, a chartered accountant who is doing a bank audit and is raising an invoice to the head office of the bank, which is in another state, then obviously he is making a interstate supply, because we have already discussed that the place of the supplier and the place of supply shall be in the same state to classify as intrastate supplies. So the chartered accountants, even though their turnover is less than 50 lakh, shall not be eligible to go for the composition scheme in case they are providing services to the other state, the clients or the persons or the office to whom they are billing is located in the other state. That means they are engaged in interstate supplies. Then the second condition is that a person cannot opt for this scheme if his turnover exceeds 50 lakh with regard to all registered taxable persons under the same PAN number. Meaning thereby, let us say I am a service provider who is having 4 offices in India, maybe in the state of Delhi, Bombay, Calcutta and Madras. And in case I want to opt for the composition scheme, first of all the 4 offices should engage into interstate supplies, and then the aggregate turnover of all the 4 offices shall not exceed 50 lakh in a financial year. Collection of tax from the recipient of supplies and credit of input tax is not being allowed to the persons who has opted for the composition scheme. This proposition is absolutely reversed as compared to the present scenario when we compare it with the service tax law. This position has been followed from the VAT law. If you look at the service tax, a composition dealer, of course now that scheme is not there, it was only there from 1st June 2007 to 30th June 2012 when the negative list regime came. The person who was opting for the composition scheme in the course of execution of work contract was allowed to charge service tax, and the recipient was also allowed to claim credit for the tax paid to the composition dealer. But now under GST law, because they have followed the VAT pattern, the composition dealer cannot collect any tax from the receiver of supplies, and the composition dealer is not allowed to claim the tax credit on all the supplies which he has acquired for the purpose of making supplies. Now we'll go to the definition of aggregate turnover, which is really important to understand, because my turnover should not exceed 50 lakh. In fact, aggregate turnover should not exceed 50 lakh. Now, what is aggregate turnover? Aggregate turnover has been defined in an exhaustive manner to mean that it is the inclusion of all taxable, non-taxable, exempt, export supplies. Meaning thereby, if I want to opt for the composition scheme, I have to include my taxable supplies, non-taxable supplies, export of goods, etc. under the same PAN name. That means all the offices which I have registered under the same PAN name. And then it shall not include taxes that is being charged under GST, that is CGST, SGST and IGST Act. So really important to understand that aggregate turnover will include all the supplies, whether taxable or non-taxable, whether export or not. But then it has been clearly stated that aggregate turnover does not include value of supplies on which such person is liable to pay service tax under reverse charge. I'll just give you an example. If a small trader is discharging the liability under GT under reverse charge or under import of service, that is to be not considered for the purpose of calculation of aggregate turnover. What is actually is to be done, whatever is aggregate turnover, that is outward supplies, that has to be considered, and has been specifically stated that value of inward supplies shall not be included in the definition of aggregate turnover. Meaning thereby, my supplies may be more than 50 lakh. For example, I am a businessman who start a business in this financial year. I may make purchases just to fill up my showroom and then to make supplies. In that particular year, my supplies may be more than 50 lakh, but my outward supplies, if less than 50 lakh, I can certainly opt for the composition scheme. And this clarity will go in a long way because there have been disputes earlier on. Now it has been made absolutely clear that for the purpose of eligibility of composition scheme, I have to consider my outward supplies, which includes taxable, non-taxable and export, etc. And taxes levied under GST, that is CGST, SGST and IGST, is not to be considered. Now we shall deal with the subject of exclusion from GST. As we all know, the exclusion can be with regard to the supplies and goods which does not fall in the definition or the scope of the GST. The power has been given under Section 10, but till date, no exclusion has been provided. We don't know what are the goods or the services which shall be excluded from the definition of GST, except petroleum product, which they say that they will be included in the GST as per the advice given by the GST Council. But there are certain exclusions provided in the various sections. For example, Section 9, which deal with the taxable person, provides that an agriculturist, definition has been given in Section 2, will not be treated as a taxable person, and my charging section says every taxable person shall be liable to pay the tax. So an agriculturist will be excluded from the scope of GST. Similarly, a registered person specified under paragraph 1 of Schedule 3 shall not be considered as taxable person. Meaning thereby, as I told you, registered person and taxable person are two different entities, two different concepts in GST. I am supposed to seek registration when my turnover of supplies exceeds 9 lakh generally and 5 lakh in the case of 4 lakhs in the case of northern eastern state. But my liability will start only when my turnover exceeds 10 lakh and 5 lakh. 5 lakh in the case of northern eastern states and 10 lakh generally. Central government or state government or any local authority with respect to the activities as defined in Schedule 4, which are in the nature of sovereign function of the government, shall not be considered as a taxable person only for those activities. I am again cautioning you, if the government is carrying out any activity which is not being specified in Schedule 4, they will also be covered under GST. They will also have to seek registration and accordingly comply with the provisions of law. And then the exclusion which is already there, any person providing service as an employee to his employer. Now they have done certain innovation in this. If you look at clause 1 and 2, they are absolutely on the same line in the course of his employment or in relation to his employment. The third clause is really important, which is the innovation and improvement by any other legal ties creating the relationship of employer and employee as regards working conditions, remuneration, and employer's liability. In my humble submission, sometimes we don't give an employment letter to the employees. He is being treated as a trainee or apprentice. So even those trainees or apprentices, though they are not employee in the strict sense, but once they are providing a service which is being equally comparable with the employees in terms of working conditions, remuneration, etc., even their activities shall be outside the ambit of GST. Then comes any person who exclusively engaged in non-taxable supplies. I'm just assuming, of course, as I told you, no goods or supplies have been specified. Let us say wheat is being not forming part of the subject matter of GST. If I am dealing or trading only in wheat on which there is no GST, then I am not supposed to seek any registration. I am being exempted and I am not being treated as a taxable person. Similarly, any person who is liable to pay under reverse charge receives services for his personal use below the limit which is to be prescribed. Here I would like to recall you when I was dealing the definition of supply given in section 3, I made it very clear that importation of service, whether for business purpose or personal purpose, whether for consideration or without consideration, shall be treated as a supply. Now, in order to save the individuals who are receiving the services in their personal capacity and not for the purpose of business, for example, I am constructing a house for myself, I want to engage an architect. So they say if it is a huge amount, then it may be taxable because the exemption limit has to be prescribed in the law. In model law, nothing has been stated, but this section clearly says there will be a limit, and if I am importing the service for my personal use, then I shall not be treated as a taxable person and will not be liable to pay tax. Now I am coming to the various laws which are being excluded. If you read this clause, it says from the date of commencement of the act, which in probably as per the government will be 1st April 2017, Central Excise Act and Central Excise Tariff Act shall apply in respect of goods included in entry 84 tobacco product, entry 54 of union list and the state list respectively. Meaning thereby, the excise law and state VAT law will continue to be there because there are certain items which will remain out of GST like tobacco or petroleum product, and to collect excise duty and to collect VAT on those items on which GST is not being levied, these acts are abolished subject to that saving clause that those items which are not subject matter of GST will continue to be collected tax under the existing law, that is excise or VAT. But the following acts have been proposed to be deleted, subsumed, that is entry tax, entertainment tax, luxury tax act, duty of excise on medicinal and toilet preparation act, and chapter 5 of the finance act, that means service tax. So these acts, because they are likely to be subsumed wholly within GST, so they are being deleted from the day. Of course, deletion means with the saving clause, all proceedings which are pending, all decisions or appeals which are pending, they will be decided in terms of the old law. With the saving clause, these laws are likely to be repealed once the GST is being implemented from the appointed date, which as present the central government is thinking that it should be 1st April 2017. But in any case, it doesn't make any difference because the trade says they need some more time. It is a transaction based tax. Kindly understand, we need not wait for the end of the financial year. Like in income tax, we have to compute the income for the financial year. It's a transaction based tax. It can come on any day on the appointed day. And I would like to recall you that even service tax was implemented on 1st July 1994. It was not from the beginning of the financial year. So I personally feel that this law is going to come in the year 2017, if not from 1st April, then maybe 1st July or 1st October positively. So with these words, I am concluding my first chapter, that is levy and exclusions from GST under Model Law 2016. Thanks.